Vice President Advocate Aniruddha Chavan sir, our Secretary Advocate Ganeshwar Narode sir, and Joint Secretary CMA Navnath Nalavade. Let's give them big round of applause. To begin today's session, I would like to invite our study circle chairman, Mr. Navneetlal Bora sir, to share his thoughts and set the tone for today's study circle. Over to you, sir.
Good afternoon. Respected dais of the dais, thank you for being here today for our study circle meetings. It's great to see so many of you interested in learning more about Vivad Vishwas scheme 2024. We are lucky to have a well-known chartered accountant with us today who knows a lot of income tax. Our focus will be on Vivad Vishwas scheme 2024, which is an important part of the Income Tax Act that helps settle tax disputes and makes the process easier for everyone. Our speaker will explain what this means and how it can help us. Let's give warm welcome to Speaker Subhash Bora. Thank you very much.
Now it's my pleasure to invite our respected President, Advocate Prasad Deshpande sir, to share his thoughts.
Namaskar. Respected Study Circle Chairman and Past President, Mr. Navneetlal Bora sir, today's faculty, CA Suhas Bora sir, Vice President Advocate Aniruddha Chavan sir, Secretary Ganeshwar Narode, Joint Secretary Navnath Nalavade sir, Galaxy of Past President, senior members of association, all the participants present in the hall and on Zoom platform, my brothers and sisters, good afternoon. I, on behalf of Maharashtra Tax Practitioner Association, welcome you all in the 6th study circle meeting on the very important topic Vivad Vishwas scheme. I am thankful to today's faculty, CA Suhas Bora sir, for accepting our invitation. I delighted to see all of you here today as we embark on this journey of learning and growth together. We at our association regularly organize various educational programs for updation of our members. We are arranging regularly seminar, webinar, study circle meeting, workshops on the subject of income tax and GST as well as allied laws. We request all the members attend all such events regularly and also give suggestions for selecting topics. I encourage each of you to participate, ask questions, and share your experiences. Let's make this study circle a platform for collaborative learning and professional developments. Thank you once again for joining us today. Let's make this session insightful and productive. Thank you very much.
Thank you, President sir. Moving forward, it's time to introduce the key speaker of our today's session, our esteemed faculty, CS Suhas Bora sir. I would like to invite our committee member, Mr. Subhash Godke sir, to introduce our today's speaker.
Thank you. Good afternoon. President Advocate Prasad Deshpande sir, Chairman of Study Circle Committee, Shri Navneetlal Bora sir, VP Advocate Aniruddha Chavan sir, Secretary Ganeshwar Narode sir, Joint Secretary CMA Navnath Nalavade, and of the dais, respected members. Myself, Subhash Godke, Managing Committee Member. It's my pleasure to introduce CS Suhas Bora sir, a distinguished figure in the field of finance and taxation. Sir was student of MES Garware College for BCom and MCom in 1981 and 83. He enrolled ACA in the year 87 and FCA in 1992. Sir, since 1987, sir is practicing as a chartered accountant. Sir was founder member and senior partner of SPCM and Associates. Sir is practicing in the field of audit, direct taxes, indirect taxes, company law, and RERA. Sir was co-opted member of Committee of Capacity Building of Members in Practice created by the Central Council of the Institute of Chartered Accountants of India, New Delhi for the year 1819. Also co-opted member of Committee of Direct Taxes of the Central Council of the Institute of Chartered Accountants of India, New Delhi for the year 2019-20. Sir was chairman of member of Managing Committee of Pune branch of Western India Regional Council of the Institute of Chartered Accountants of India for the period 1995-97. Member of Pune Governing Council of Confederation of India Traders. Convener of CSL of Jito Pune chapter. Regular paper writer for articles to be published in newspapers of professional and trade organizations. Regularly faculty in various seminars on topics relating to taxation of real estate and joint developments, income tax planning and investment, family arrangement, and HUF tax planning, bills, appeals, GST, sales tax laws, VAT audit, laws relating to trust, service tax laws. Also renowned speaker in the field of time and stress management, key to success in profession and other motivational spiritual subjects. Founder member of active faculty of Pune City Study Circle and also regular faculty of Pune branch of WIRC Pune Chartered Accountant Society, Maharashtra Tax Practitioner Association, AIFT, Bombay Chartered Accountant Society, etc. Active member and advisor for various social and charitable institutions such as Jito Pune, Pune Farmers Trust, Maharashtra Saraf Association, Federation of Trade Associations of Pune, Kredai, Pune Merchant Chamber, Jito. With this short introduction, we welcome sir with a round of applause. Thank you.
Thank you, sir, for the kind introduction. To further express our appreciation for his presence today, I now request Advocate Prasad Deshpande, sir, to felicitate our today's faculty, Suhas Bora, sir. Thank you, sir. Now, ladies and gentlemen, we come to the most awaited part of today's program, the lecture on the Vivad se Vishwas scheme 2024 by CS Suhas Bora, sir. I am sure his expertise and insights on the topic will enlighten us all. So, without further ado, I invite CS Suhas Bora, sir, to deliver his lecture. Over to you, sir.
Good afternoon to all of you. President of our organization, Prasad Deshpande, Study Circle Chairman, and my friend Navneet Lal Bora, Vice President Anirudh Savanji, then Convener of Study Circle, Mrs. Ashwini Bidkar, my friend Santosh, Narendra Sonawale, Sripal, and other esteemed members of this My Mother Association. I always claimed it being Mother Association because before I became a chartered accountant, I was enrolled as a tax practitioner. And the first member I was of this, that time it was known as a ITSTP Association. So coming here and to speak is always a pleasure. My friend Navneet Lal Bora, while speaking high about me, saying that I am having vast knowledge of income tax, it is out of only friendly because we share so many things. But let me correct myself also. I am not a person who has a vast knowledge of income tax, but I am definitely a student of income tax, and I wanted to be a student of income tax all the time. I was, I am, and I will be also. So in today's study circle meeting, we will be learning and unlearning. For me also, something unlearning, some learning also been there. And all of us will be embarrassed on the, or I will say all of us will be exploring the topic of Vivad se Vishwas. Friends, when we know as a tax practitioner, every year budget came, this year also budget came, and there is an announcement of Vivad se Vishwas scheme. Why? It was already been there just 4 years before. Then again this scheme. And as a tax practitioner, as a student of tax laws, we all are aware the complexities and the prolonged nature of tax litigation. When I speak about the tax litigation, all of us are aware that whenever we wanted to go for an appeal proceeding, there is a huge demand created. There have been additions which have been made. There have been different complex issues have been there. But at the same time, it's burden to the taxpayer. It's a burden to taxpayer. Similarly, equally burden to the income tax department of the government also. So this scheme was again introduced with a new avatar, we can say. Some provisions are here and there, but barring by and large all those issues which were there in VSVS 2020 are also been there in VSVS 2024. So objective is simple, wanted to reduce burden of litigation and foster a settlement of oriented approach. So it provided an opportunity to taxpayer who could not afford to go for litigation. It's been an opportunity to pay in case of the depending upon the level of appeal stage and whether it's a SSC or whether it's a department, we'll have to pay disputed tax or certain percentage of disputed tax or interest or penalty. I will discuss all those issues which come across when I go through the basics of the scheme at all. So our role as a tax practitioner, I said, we are not just a tax advisor. We are facilitators of a peace between taxpayer and also the government. And our responsibility is to guide our clients through this scheme, helping them to assess whether the litigation is beneficial to them or not beneficial to them. It also becomes our duty to encourage, to educate, and to give reassurance to the taxpayers about the scheme, benefits, and especially who may hesitate due to the lack of clarity or apprehension about the process. I hope when the budget was announced, each one of us listening offline as well as online must have gone through this scheme of Vivad se Vishwas 2024. So if you know the basics of the scheme, as I said, he proposed why. So just to recap, in 2020, when this such scheme was being introduced, there were almost about 483,000 appeals were pending at a different level, right from CIT appeal level, tribunal level, High Court level, Supreme Court level, even 264 petition as such to work. And under that scheme, almost 1.96 lakhs appeal, or 1.46 lakhs appeal, means having a tax amount of 0.54 trillion were resolved. And this reduction from almost 4,83,000 by 1,446 means 1/3 has been reduced in 2020. From there till today, means till January 24, this pendency of appeal has gone up substantially again. At CIT appeal level, now the pendency is almost 5,44,205. And at ITT level, it is 20,266. At High Court level, it is 37,436. At Supreme Court level, it is 5,554. And in all those appeals, if the disputed amount has been worked out approximately, it comes almost 10.40 trillion, which is, to the best of my knowledge, is almost 6% of our GDP. So that is the reason probably Finance Minister might have thought of introducing one more time this scheme. If we think about a comparison, I will not go to the last 20 years, but in last 4 years, rather from 2016, we have seen transformation from the Financial Act as such. And so in the first scheme such was been introduced in 2016, it was direct tax dispute resolution scheme. Not go to the last 20 years, but was only last 4 years, rather from 2016, we have seen transformation from the Financial Act as such. And so in the first scheme such was been introduced in 2016, it was direct tax dispute resolution scheme. Not go to the last 20 years, but was only last 4 years, rather from 2016, we have seen transformation from the Financial Act as such. And what has spoken is reproduced. Okay. So when I speak about such type of scheme, I was sharing with you, there was been a direct tax dispute resolution scheme, which was from operation from June 16 to the December 16, and it was only up to the level of first appeal stage. It's a CIT appeal stage where we have to pay a disputed tax and interest, and there will be no penalty as such to work. In that scheme also, there is a collection of almost 1,200 crores. Disputes were settled, there is a collection. Then in 2020, as we are knowing this DTVS 01, commonly known as, which is introduced, which was further refinement is there, and then all level disputes were introduced, where there was a dispute related to CIT appeal, High Court, Supreme Court, Tribunal, 264 petition, DRS, etc. was been there. And there also almost disclosure of 98,765 crores and almost 1.32 lakhs applications were there. And tax collected by the department was 263 petition, DRS, etc. was been there. And there also almost disclosure of 98,765 crores and almost 1.32 lakhs applications were there. And tax collected by the department was 263 petition, DRS, etc. was been there. And there also almost disclosure of 98,765 crores and almost 1.32 lakhs applications were there. And tax collected by the department was 263 petition, DRS, etc. was been there. And there also almost disclosure of 98,765 crores and almost 1.32 lakhs applications were there. And tax collected by the department was 263 petition, DRS, etc. was been there. And there also almost disclosure of 98,765 crores and Okay. Okay. This is what exactly happened to the tax litigation and dispute. And so I am aware, and that is the reason why our Honorable Finance Minister thought it of having direct tax Vivad se Vishwas scheme 2024 again. With this background, if you see the scheme as such, it involves only 11 sections, section 88 to section 98. And in short, if I say the section 88 deals with short title and commencement, 89 deals with definition, 90 about amounts payable by the declarant, 91 is filing of declaration and particulars to be furnished, 92 is time and manner of payment, 93 is immunity from initiation of prosecution proceedings. Here I beg to make out one correction, small. It's not initiation. It has to be institution of prosecution proceeding. Then 94 speaks about no refund of amount paid. I will clarify where it is possible to have a refund also. No benefit of concession or immunity to declarant other than what has been specified or relevant to the assessment year. Then 96 section speaks about there is a bar on this scheme where it will not applicable. 97 power has been given to board for issuing directions. I am aware this will, after this lecture, there will be a lot of FAQs which are going to come, which will be clarifying the issues which I am discussing will be definitely done. I will request our president and Santoshji for direct tax committee to take these matters to the CBDT. So there will be FAQs to work out. And then 98 is the last one is born, power to remove difficulties. Having seen in brief such type of scheme, what has been there is what is eligibility conditions. And as I said, there have been three categories. One is appeals, REIT, SLPs, which have been there. What is important is this cutoff date is 22nd July 2024 is been the cutoff date. That is most important. Their beauty is what? Whether it is appeal or appeal, REIT, special SLP filed by SSC or department. Both are being covered. And appeal may be pending before all those appellate forum, CIT appeal, JCIT appeal, ITIT, High Court, Supreme Court, any level it is pending. Then second category is eligibility on dispute resolution panel. Here there have been two issues. One is where issue has been pending before DRP and DRP has not issued direction. This is first stage. Or where directions have been issued, but assessing officer has not passed the order, still you will be able to cover there. Third one is a revision filed under section 264. It's been very rarely used by the SSC, but that has been very fundamental tool which we should consider as a practitioner. 264. Here, along with 264, because revision, they have mentioned about 264, but there is a revision by the commissioner also, and there are the post 263 proceedings that have been the assessment which has been worked out. Those are also eligible if the appeals are for them are pending before the appellate forum. But the beauty of this is this scheme, basically, what is difference from 01 and 02 is what? There are two types. One is old appellant case and new appellant case. Old appellant case is naturally, that cutoff date is of 31st January 20 was the sunset clause for the earlier VSVS 2020. So if you are not opted for that scheme and still your appeal has been pending at whatever forum, you are still eligible to file. That will be considered the old appellate case, and there has been some higher amount you need to pay than a normal SSC of new appellant case. And normally when we see the definition, they have to define correctly. So they make it old appellant and new appellant case, which is not old appellant. So very easy to define. There also they make out the same way. Who has been a new appellant? Naturally, he has filed appeal after 31st January 2020. So he will be new and his appeal is pending. That has been and specified date is what? For them, 31st January. Specified date is here only. Again, what? Of 22nd July 2024 is been said, specified date. But those appeal must be pending there. Then, in short, if I summarize what we need to pay. So there are two types of classes we need to pay. One is if the appeals are been pending of the SSC and appeals which are filed by the department. These are the two broad classes. In those two broad classes, there have been two types of the things: old appeal, old declarant, and the new declarant. So if there, and again, there is a subdivision. If it include disputed tax, penalty, interest, this is first category. If it is have a disputed penalty and interest, so both way category is different. If this matter is for the disputed tax, including interest and penalty, then it is 100% of disputed tax you have to make the payment, and payment also has to be made before 31st December 2024. Then in case of sees new appellant case only, if you are not able to make payment up to 31st December 24, then you are liable to pay what? Thereafter, 4th January, if you are making the payment, then 10% dispute tax will be added to it. Then case of old appellant case is what? Again, it has been only in case of the interest and penalty. Then again, it's a disputed tax plus 10% of disputed tax and aggregate disputed tax plus 20%. So by and large, if you see, they have made a category for something more for the old appeal because they have not opted for VSVS 20. Then penalty matters and the interest matter, if are independent, which are not dependent upon the quantum appeals, can be also through the settlement scheme to work out. Similar category is for the department appeal which have been pending, and there exactly 50% you have to make the payment for the eligibility of conditions to work. That takes me to another clause which I said, keep cases which are not covered, who are not eligible. There are 5 types of SSCs they make out. Those are not eligible to cover for the opt for the scheme. And first is, I am taking up search assessment. Search assessment, which speaks about they are not eligible. If you remember in 2020 scheme, search assessment up to amount of 5 crores rupees addition were considered. Here there is no such classification. But here they wanted to say search assessment under section 143, under section 147, under section 153A, 153C, and on the basis of search under 132, that is most important, which I will discuss further, on the basis of search. Then next category is what? In respect of the SSCs where prosecution has been instituted. There is a difference between institution and there is a difference between initiation. So prosecution has to be instituted not only under the Income Tax Act, but under IPC, under Unlawful Activities Prevention Act, narcotics, drugs, and even the all other PMLA, Benami properties, and even Bharatiya Nyaya Sanhita 2023, which has recently been changed the act. Even if under such any prosecution has been instituted, then you are not eligible to make out. Third is when if your matters are relating to undisclosed income, which are arising out of source located outside India, means foreign asset, which has been there. Then where order of detention made under conservation of foreign exchange, even if there is a FEMA violation and you have been detained and that is related to that assessments to work out, then you are not eligible. And then special section 3 of Special Code, trial offense relating to the transaction in securities of 1992. All these are 5 class of the SSCs or 5 cases, 5 situations where you are not entitled to opt for the VSVS scheme, irrespective of the amount, irrespective of the smallness or big quantum involved. That takes me to later on a dispute, various important definitions, which I'm not touching on everything, but I'm touching only important definitions. One is disputed fee. We are knowing after this Modi budget from 2020, there is one class of penalty which is considered the fee has been introduced. It is amount also penalty, but tedious, you find. When you fail to make compliances, there will be a lot of fee you need to make out payment. Such fees are being disputable. Initially, it was not in the Act, Section 200 Act, they later on amended. Then after 15 June, those also been covered. Those 234E penalty are been basically to work out on that. So these disputed fees means a fee determined under provisions of Income Tax Act. So no other act. In respect of which appeal has been filed. So what are the conditions? First of all, fees in respect of Income Tax Act, not GST Act. So Income Tax Act. Then you must have filed an appeal before cutoff date. That is second condition. Then disputed income. In relation to assessment year means whole or so much of total income as related dispute tax. So for which you have filed an appeal. That is most important things to work out. Then that takes me to another is disputed interest. Here also, interest means what? Interest determined in any case under the provisions of Income Tax Act, where such interest is not charged or chargeable on the disputed tax. That is, an appeal has been filed. So there are again twin condition always has to be remembered. You must challenge and you must file an appeal. And that appeal has to be before cut-off date. That takes me to a disputed tax. There are two situations which I envisage in the assessment year or financial year. So they are here using word assessment year or financial year means the income tax including surcharge and cess. So there is no doubt that whether basic tax, surcharge or cess not to be, it is including that. And then in case where an appeal or a writ petition or SLP is pending before 22nd July. So again, pending on 22nd July is important thing. And how that amount will be calculated? The amount of tax is payable by appellant if such appeal or writ petition was to be decided against him. So means it has been there, its SSC is being contemplated. Where is what second B is, as I said, it is on the DRP. It is again same, who has to confirm what is, had it been that DRP has not passed the order or DRP has passed the order, then what is the quantum which has to be think about, and then that will be considered disputed tax. Third category is what again on disputed tax only where as per assessment order passed by the AO in pursuance of DRC, and that is again appealable. So that will be the amount including the suggestion, including the observation, including the directions given by DRP. That is important. And then in case of 264, what has been there, that how it is to work out if application of revision is not considered or not contemplated by the department. Then where there is a dispute in respect of 115J means MAT liability and unabsorbed depreciation. There also they have given two options. Either you pay tax and carry forward the notional depreciation full, or you reduce amount of depreciation to be carried forward and you need not to pay any taxes to work out. Same is the condition for the MAT also. So tax area, that takes me to the definition of tax area. The aggregate amount of disputed tax, interest chargeable, charge on such tax, penalty leviable on such disputed tax, or interest, penalty and disputed fee. Here simplify to make out if your appeal consisting of, there are 4 additions. So additions on account of section 48(3), additions under section 68, addition under section disallowance of expenses. Now these 3-4 issues involved. Is SSC can opt for only because section 68 it is possible for him to convince the appellate forum. 48(3) is able to convince, therefore he will not opt for VSVS and only for disallowance of expenses he will opt. No. If you wanted to go for VSVS, you need to apply all the additions which are passed in the assessment order. That takes me to a later one part is a refund. It is categorically said no refund will be provided under the scheme. But there is one back of is what? If the refund arises to the SSC because of the tax payment which are made earlier to filing of a declaration, then such demand, if there has been this, for example, you have assessment order which had a 1 crore rupees demand. You have paid 20%, 20 lakhs rupees. There was a refund due for the earlier assessment year, which was adjusted to another 20 lakhs rupees. So this 40 lakhs rupees and your tax liability has come to less than 40 lakhs rupees, and there is refund of 10 lakhs rupees. Whether such refund is possible? Yes, such refund is definitely possible. But what is a bar on refund is, refund, there is a bar only on the, if you opt for the scheme, you make the payment which has been determined by the designated authority, and then you find it, there is no excess amount or you don't want to go for the scheme also. So whatever amount you paid will not be refunded at all to you. So this is so far as refund is concerned. Now if you say is forms, simple forms, same like VSVS 01. It is form number 1, which specify for filing a declaration and undertaking. The undertaking is very important thing. We have to be very careful while giving the undertakings to work. Then form 2 is issuance of certificate. Once you file the form, within 15 days, the designated authorities will issue a certificate. Then form 3 is our intimation, giving compliance whether we have made the payment of taxes, challans, etc. Evidence has to be given, and along with that, we also have to submit the copy of withdrawal letter to be submitted. Then, for which showing your indication that you have withdrawn from the appellate forum, whichever is pending. Then form 4 will be issued. It will be issued by designated authority, and they will say whether there is amount is payable or amount is refundable to this. That takes to the procedure. Procedure speaks about filing of declaration by the SSC. Then designated authority will be, after you file the declaration, within 15 days, they will take out they will issue a certificate. Then that will go to declarant, who will make it a case, who will make that whether amount is payable, amount is refundable. And then last, the designated authority will pass an order which will have to work. I was discussing with you that there are two mode of operations which have been mentioned while computing disputed tax in respect of unabsorbed depreciation and in respect of MAT. And there I find out easy way to understand. I made out 2 examples. Say, for example, amount of loss or unabsorbed depreciation carry forward as per return is rupees 3,000. Amount of loss of depreciation carry forward as per assessment order 2,000, means there is a reduction of loss or is 1,000 rupees. Amount is too small, you can consider in crores rupees also, because that is what the question. Then how to make out? There are 2 options. One is what? You pay 50% of that loss which have been disputed, say 500 rupees, and you are allowed to carry forward 3,000 rupees as a loss continuation. Or then option 2 is what? You have to pay, you need not to pay anything. You reduce from that 3,000 rupees, that 50% of 1,500, and you are allowed to carry forward 2,500. With the assumption that for remaining issues, you are paying 100% of disputed tax to work. Same is the condition for the MAT. We are aware that when there has been difference between a tax liability as per regular our computation, as per P&L account, and as per tax laws, there is a difference, we need to pay a MAT. If there has been a reduction in MAT due to the assessment, same way, with the same example, if I make out, option has been given the same way. Either you pay tax and reduce MAT liability, or you don't pay tax and you carry forward the MAT liability assessed to it. So these are the simple provisions which I make out. The immunity. Now, when you speak about the immunity is what? Qua that assessment year in which you are offering. And it is for what? It is for the offense. It is for the penalty. It is for the interest. When you settle down certain disputes under the 1 year, whether you are being immunity has been given for the other years, if the similar issue arises and you are not liable for paying tax, no. You are only getting the immunity for the offense or penalty or interest or the tax on the issues relating to the assessment year for which you have opted for the schemes to work out. That takes me to the basics of VSVS. And now I wanted to come before you, the various issues which, in my mind, we will be requiring certain clarification or certain assumptions, or we will have to make recommendations to work out. The first such issue which comes to mind is in respect of applicability of search and seizure cases. As I said, in 2020, there was a provision where even search and seizure assessment were covered up to an amount of rupees 5 lakhs. Then, in this scheme, when I go through the provisions, when I highlighted you the provisions at all, there is nothing which can be spoken about whether search cases are covered or not. So we'll have to make whether a search cases will be there or not. Then next issue which come to mind, assuming for a moment, the search cases they wanted to keep aside. And there is an assessment which contains, there is addition on account of search as well as additions on account of non-search cases, points also. In that scenario, to my mind, are you eligible to opt for it? No, because they categorically said it is not possible. So you cannot make it partial opting for VS to consider. Second issue which comes for search assessment is that section 96, where it has been used, the provision says assessment on the basis of search initiated under section 132 or 132A, and that is been given specifically in section 96 subclause A.1. So here the two issues which are coming to my mind. One is whether this provision is applied to the only person who has searched or to others also. Though they have not stated categorically, however, this 96 section includes, as I clarified you, it's a search assessment under section 143.3, 147, 153C, and all those are or. So indirectly, they have given us a mandate saying that even if a case of a search person, there is some material found and assessment has been completed under section 153C. So he is also debarred from making application under Vivad. Now after 1/4/2021, there is an amendment. There is no 153C, but there is 147. So 147 also been covered. So even if there has been a document found on the basis of search, 147 has been initiated, and that assessment contains only a few thousand rupees additional on account of search paper, and other than, because 147, if it is open, it's an open Pandora box and it is foolproof. So other issues also been tackled, has to be tackled, and for other issues also, he may not, even if he desire, he cannot go for it. So probably there will be a lot of litigations which we come across. We are knowing, all we practice in Pune. We are aware that lot many cases have been there due to the Renuka deposits found. And those cases, whether it will be covered? No, because it is 153C cases to work out. And recently there have been Pune tribunal decision which speaks about in such cases only 153 is permissible, not 148. So they categorically said arising out of search only. So such type of cases, to my mind, will not be there to work. Now, if the search is in, for example, say in the year 2020-21, an assessment is for later on or earlier years. So if your assessment is for 98 also, 2000 also, because 10 years we can go. So 2010-11 also. And if it is arising out of search, then even that assessment will not be qualified for the purpose of the associations to work. So as a corollary, simultaneously, if you see, it speaks about only section 132 and 133, 132A and 132. 133A is not being considered. So all those assessment for which has been arising out of survey under section 133A, there will not be any issue. The assessee, if he desires, and if his assessment fit in the conditions of the thing, then definitely he can qualify for the various base scheme to account. I was stressing upon the refund in this case. And refund, yes, provision speaks about no refund has to be given. Exactly, I have verified, exactly similar provision was there in 2020 scheme also. And there also, same rider was given. If the amount is tax has been paid earlier, then refund will be given. But that time also there was no mechanism. Today also no mechanism provided. When refund will be issued? Not there. At what time? Not there. So, in 2020, I come across 2 or 3 decisions of the Bombay High Court, which they says, if refund is due under the VSVS as per Form 5, and it is not been paid in a reasonable period. So there was also one instruction of CBDT in 2020-21, instruction number, I don't remember right now, but it says, If a refund has to be due to the assessee, it has to be paid within 90 days from the date of passing of that order. For VSBS also. So taking the shelter of that case and also a Supreme Court decision of earlier, Honorable Bombay High Court has decided, I will give the case laws later on when I make out. They have decided if there is a delay more than 90 days, then assessee is entitled for refund of 6% per annum on the refund due to him. But as of today, there is no mechanism, no provision, and they categorically say there is no refund will be issued under VSBS. My argument or my interpretation is that if there is a valid declaration and assessee has paid the taxes and he has withdrawn, or he has paid the taxes as per the tax amount determined by the designated authority within the due date, that tax will not be refunded to him. But there also, if his declaration considered to be invalid, then my argument will be, if the declaration is invalid, there is no authority for the department to take out my cash or seize my that amount or forfeit my that amount which I paid. It may not be refunded or it may be adjusted against your other liabilities to work out. And there also, I will give a citation of a Bombay High Court decision which speak, though in the context of IDS that was been there, but it is equally applicable to my mind in VSBS also. That takes me to the treatment of the dispute which are settled at lower level. Which are of those things means? Because there is no clarification as such to work. Take an example of assessee who has won the cases at CIT appeal level right now. And department filed an appeal. Whether he can opt, if that appeal is pending as on 22nd July, definitely he can opt. But now take a situation, the appeal has been decided in favor of the assessee, say in the month of June 2024. So, time limit for filing an appeal is not expired. Whether such type of assessee will cover, as of today, no. So, we need to seek a clarification from CBDT on this issue. Then, you considered that department has filed appeal, but after 22nd July 2020. Whether assessee can make out? No answer today. If FAQ comes, we make, but we definitely have to pursue such type of cases for the FAQs to work. And third, I said, given time limit is not expired, such assessee, why they should be lose the benefit? Because this has been, government is advancing, this has been beneficial scheme. And beneficial scheme, if statutory right has been there, why it can be deprived of? So therefore, we have to make out. And the fourth, which I consider is that where partial relief has been given. Partial relief has been given, maybe at CIT appeal level, maybe at ITT level or High Court level. Then in what? That's in your vote. And all those three issues applicable, pass order before that, after filing, time limit is not expired, or time limit was expired, but it was filed with delay condonation not decided. All those issues, we required a lot of clarification from the CBDT, where before we really venture out for the DTVS to concern. That takes me to the another important topic on the disease is the penalties and interest and the relief provision. They specifically say when we deal with the penalties and interest, penalties qua assessment, if has been there, then unless and until you come forward for the settling quantum appeal, you are not eligible. Two types of penalties are there. One is qua assessment and one is not related to assessment, which are not dependent upon assessment proceedings to concern. Say, for example, 271AB, that is for non-appearance of before the AO, or non-maintenance of books of accounts, or non-making of audit 271B, not related to the quantum. 271E also, 271DA also, which are not related to quantum, you can eligible to make out for the scheme as well, provided again twin condition, appeal has to be filed and it is to be pending on 22nd July 24. Similar is the case of interest also. Interest, I find out there is a case, suppose you are not disputing the quantum addition. but you are disputing the levy of interest. So for example, 147 assessment. It's always been an issue whether in case of 147 assessment related to the earlier year, whether interest will be charged from that year, or if you file the return in response to 148 in time, then from that day. And my always the argument is that 148 contains a proviso which speaks about if I file the return in a time granted under section 147 notice, 30 days or 3 months time which is being given, then there is a proviso to 148 which speaks about that return which I filed will be treated as return filed in response to section 139(1). If that has been a condition, then question of levy of interest under 234A from that day doesn't arise. So such type of things we need to first of all appeal, because normally we always in our mindset due to the Supreme Court decision of Gaswala that levy of interest of 234A, B, C is mandatory. It cannot be challenged. It can be challenged. Then 234B, whether respect to my return income or assessed income, there has always been a dispute. And there has been a Telangana High Court judgment which speaks about it has to be speak about the return income, because you cannot foster out advance tax liability on the addition which have been made by the officer after 2 years that I need to pay advance of 90% before 31st March. On that analogy, it's possible. So therefore, such type of interest also can be possible. But as of today, they said no. If your interest is linked with assessment, then you cannot file under DTVS. That is with the issue, which we need to have a clarification to work. That takes me to another important is that whether there has been a declarant has to be appellant, only whose appeal is pending in that case. Why this issue come across in mind? The issue come across because scheme, if you see section 89, subsection 1A, which speaks of what is the definition of appellant. It gives the appellant means a person in his case appeal has been filed, and as per section 89 1C, declarant means a person who has filed declaration under section 91. So there is a dichotomy. Definition of person has not been provided. Now see the situation where the issue arises after filing an appeal. There is appeal relates to HUF, there is partition of HUF. If appeal relates to company, it may go under liquidation, it may go for amalgamation, it may go for dissolution. Then succession cases, in case of firm or LLP, there is dissolution, or there is a winding up, or there is a demise of individual person. In all those cases, whether the person who has filed an appeal and whether the person who is making declaration same, there is no. But when I go for a fine-tuning reading of it, in the section 89 itself, I find that there is a proviso in section 89 subsection 2, which speaks about that words and expression used herein means in the scheme and not defined, but defined in the Income Tax Act, Parent Act, then it shall have the same meaning respectively assigned to them in the Act. So in the Act, there is a provision in all those situations. There is a person which has been authorized signatory. There has been a person who is legal heir. There has been a person who is changed in Karta. All those can be, they are eligible as a SSC, because SSC who is filing declaration and the SSC who has filed an appeal are different. Deemed appeal has been another issue which I need to take out, and for which we must make a clarification from the CBDT. Deemed appeal, I made a passing reference. Deemed appeal means what? Where on cutoff date, that is 22nd July 2024, appeal has been passed by the CIT appeal, assessment order has been passed by the AO, passed by the tribunal, and for which time for filing an appeal or passed by the tribunal, High Court time also, has not been expired. So is it not a statutory right of the SSC to consider when there is a beneficial scheme available, he should not be deprived of because it is not mentioned in the Act. In the earlier scheme 2020, there was a specific clause being provided, such deemed appeals were considered. So now we have a choice. We have to go for the finance minister. What was there in the last year, last scheme which we developed, for which you collected a massive tax collection, why you are depriving of such people to work out? So probably they will consider and they may come across such things to work out. That takes me to the another issue which I considered is admission of appeal. See, admission of appeal, in CIT appeal, there is no provision of admission. But then later on for the next forum, and at least in the High Court and Supreme Court, there has been a separate order has been passed for the admission of the things to work out. So whether appeal is admitted or not, say maybe any circumstances, take circumstances like numbering, removal of defects, removal of objection, non-filing of appropriate fees, non-payment of self-assessment tax. That is also one. See, unless and until you pay self-assessment tax, you cannot file CIT appeal. Even if you file it, it will not be considered as a valid appeal if you are not paid self-assessment. So for any level, post itself, self-payment, on that account, if your appeal is not admitted, then what? In my opinion, under the scheme, they are very plain vanilla situation they have described. Appeal is filed, it is pending on that cutoff date. If these twin conditions have been suffice, whatever may be the situation, this appeal will be eligible for DTVSVS to concern. Only thing is what? That is what is important, appeal filing before cutoff date. Except that clarification which will come across will work out. And I find it in earlier scheme also, in two state government scheme which are similar to dispute resolution scheme, and in even the KVSS also, there was in KVSS there was a condition that appeal must not have been filed, but it must be admitted. In that case also, High Court says, this being a beneficial provision, you cannot deprive of the right because it was not admitted as concern. And the case was been Yuvraj Tukojira Pawar. It was 271 ITR 152. It was in the context of KVSS. So similarly, we can make out a representation saying that if you considered those, High Court has considered where there has been twin condition of filing an appeal and also admission an appeal. Then again, there has been Andhra Pradesh state government. They also have a similar scheme of DTVS. There also the issue was been there of admission, where their registration was been there. Their court has given the power. Yes, such of things will be covered, and that will be in the Senate fashions and versus DCIT is 128 STC. 89, and in case of Tamil Nadu versus R. Damodar Swami Naidu, it is 10 VST 77. This is Madras High Court. But all those are certain scheme, by and large, they come with High Courts come with the provision saying that when there is a beneficial scheme, you ought to have pass on benefits to the people who are otherwise eligible, barring issue of technicalities. That takes me to the another issue, where the order has been passed by all that any appellate forum, and you filed a revision petition, rectification application, or MA before the appropriate authority, and that MA is pending. That revision petition is pending on 22nd July 2024. So then, whether that requisite rectification carried out later on, even after 22nd July 24, to my mind, it will not violate or it will not violate any condition. SSC is eligible to file application under VSVS because there is no such condition. What is twin condition? Repeatedly I am saying is there are two conditions. One is appeal must have filed before 22nd July 24 and it must be pending. So that those are the twin conditions, and it is for both the SSCs, old as well as new. Both cases, it's the same things to work out. There is also one theory which we normally know is dating back. Because if you see MA order has been passed in your favor, it goes to the original appeal level. CIT appeal also passed, it goes to the original CIT appeal level. High Court also passed revision, it goes to original. So it is always dating back theory also will be there to support in our case to work. That takes me to another issue in a case where CIT appeal or appellate forum set aside that appeal to the lower authorities. And four visualize situation coming to my mind. One is if I say from High Court to ITAT. then ITA to CIT appeal, then CIT appeal to the AO, or from ITA to the AO. At least for High Court to ITA and for ITA to CIT appeal, there is no bar because it is appeal is still pending. But when it is sent from CIT appeal to the AO and from ITA to the AO, in this scheme, this DT West 2024, there is no provision, but there was similar provision, or there was a clarification by way of FAQ. Such type of cases also will be covered, provided those are not been sent for de novo consideration. If it is for particular issue to be set aside, then still CIT appeal to AO or ITA to the AO, those were qualified. So therefore, we required FAQs on this scheme also. Such cases, whether they are eligible or not. Then that takes me to one more important thing is enhancement. We know CIT appeal has powers of the AO, and CIT appeal equally can enhance the appeal. He can issue a notice of enhancement. There are three situations which come across to my mind. The order has been decided, not decided. CIT appeal has given the notice of enhancement, and it is received to you prior to 22nd July 2024. That is cut-off date. Then, to that case, even if you not responded to that enhancement, still appeal is pending on 22nd. So you can eligibly to file it. Then, how to calculate? Assuming that that announcement has been there, it is served to you, you have given a reply also. Then mechanism of calculating tax dispute has been the question. Here, to my mind, because enhancement of the CIT appeal is not an order, it has been just interpretation he has given, you have given the reply also. If they decided that issue, if it is decided by before 22nd date, then you have a right to file an appeal. In tribunal, you must have make out. So it's a pending, then quantum will be decided taking into account CIT appeals enhancement notice. But if it is not passed, in that scenario, you have to pay only as applicable in the quantum appeal which has been there before the I. That takes me to the situation of 264. As I said, 264 is very rarely used remedy. Only few tax practitioners or very few consultants use 264. A revision BID is also there. It 264, once you file it, if it goes against, there is no mechanism through CIT appeal, tribunal, and High Court. There is then you need to go for only High Court straight away. So normally we avoid it, and we file it whenever we are sure that the CIT is in our confirmation what we are saying, and he will give relief to us, because in 264 CIT cannot damage your case further. That is 100%. But he can accept or he cannot accept your whatever arguments you are keeping. If it is not accepted, you have only choice to go to High Court. So in 264, I only make out for the penalty or interest. Can I make an issue? I find it, yes, I can still make out for 264. But here also again, 264, if the order has been passed by the AO and time period for which I can file 264, which is now 1 year, is not lapse. In that case, what? Am I not benefited? So we required a clarification on that line to work out. And I was referring to revision under section 264 is by SSC, but there is a revision of 260 by the CIT also under section 263. And we always fight on that 263, whether he has power, whether that order is prejudicial or the interest of the revenue or not. And that on two conditions, there are empty number of decisions which fall out or may not, whether case has been discussed, whether issue has been discussed, all those are there. Assuming, we will not go in that niceties, but assuming that CIT appeal has given the verdict, he has asked the AO to pass the order, he has passed the order as per the CIT's direction, and that appeal is pending. Yes, certainly you are eligible for to make. But a scenario of deemed, that deemed provision is not been there. If it has been passed the order and time limit is not expired, or you have filed appeal against 263 direct to tribunal, and that decision has to come. Whether there is a quantum involved there, In 263, there is no quantum. So there is no tax dispute. So with only against the order of 263, you cannot file under the VSVS to concern. Only post 263, AO pass the order. If that is appealable, you file an appeal and pending, it will be covered as to work. That takes me to the another issue of belated appeal. Appeal is filed, but it was belated. First of all, we'll take only of cutoff date. All conditions satisfied before cutoff date. It was belated. It was with a condonation delay application or without condonation of delay application. First will without condonation of delay application also, because the provisions doesn't say anything about of belated appeal. It says only appeal is pending. So if you have been fortunate enough, you filed with delay condonation and delay has been condoned before 22nd July, there is no case. You can certainly file it. But FAQ is required for what? FAQ is required for cases where you file delay condonation application, CID appeal is not decided. Whether am I eligible? Or I have not filed an appeal, I have filed an appeal, but I have not filed condonation of delay application before 22nd July. Am I eligible or not? All those technicalities. So all those technicalities, my mind, we required a clarification from the CBDT before we venture out for the VSVS to concern. And there also, there is Bombay High Court decision which supports. In earlier cases, there is, for this case, there is nothing. But for earlier scheme, in such type of belated appeals, High Court has categorically said, this is beneficial provision. There is no wording in the Act that it must be admission of appeal. It only says filing of appeal and pendency of appeal. If it is that is there, that is sufficient. It was in the case of Avantika Pratap Singh Morarji, and in case of Meena Fusade, it is 285 ATR 229. So we can definitely take the spirit of intention behind the scheme and liberal approach. All the Supreme Court decisions be taken into account. If you make out recommendation, definitely there will, because they also wanted, department also wanted that scheme has to be successful. There is a lot of pendency. There is a lot of dispute involved. So such type of things, last time also it come by of FAQ, by of clarification. This time also we expect. But normally when it said, unless and until you seek, you don't get. So you have to seek. Somebody has to make application. And this association has always been there to seek. We are knowing under GST norms. We are knowing under our income tax act. There are not many applications we make it, we succeed. That is what the reason. That takes me to another defective appeal. There is, I consider admission. I consider delay. I considered enhancement. Now a defective appeal. If the appeal has been defective, means what? There are certain defects in the same. And that defective notice has been issued prior to 22nd July. It has been replied after 22nd July. Then it is filed before 22nd July. And no reply has been given. In all the four situations, it doesn't make a difference. In every case, you will find appeal is pending. It's only technicalities which has to consider. But these things are brought to the notice of CBDT. Such things require clarification, because here decision authority will not take action on this. They are not the people. They only say whether appeal pending on 22nd and tax dispute. That is the only authority given to them. They cannot make a change. That takes me to the another issue of admission, additional ground or changing of the grounds for which I filed an appeal. Many occasions when we file the appeal, certain grounds we remain to take, or certain grounds we think initially it has been taken hurriedly, we have to revise our grounds of appeal. Certain times appeal authority says you give us concise grounds of appeal. In all those cases, even if it is after 22nd July it happens, those cases also it has been appeals pending before 22nd July, and therefore they are, SSC can definitely be liable for the opting for VSVS. That takes me to another issue is, now we have gone up to belated, delay, everything gone. Appeal has been heard. Order has come. I consider deemed appeal provision not there. Time limit is not expired. Then order has heard, but the hearing has been completed, but no order has been passed. There definitely appeal is pending. Then Order has been passed after 22nd July. Then the question of demapping provisions is required. Probably, I remember last time in VSVS 2020 scheme, that time a clarification was been, instruction has been issued to the all appellate authorities not to pass an order if we intimate them our intention to opt for VSVS. Such type of instructions, I believe up till now not been given to the appellate authority. But in tribunal, I have find कि if SSC make out this case, they are keep it pending. They are not deciding the issues, even though it's an ex parte order. So here, appeal heard and hearing concluded. Order passed. Prior to 22nd July, you have option of dim appeal, but subject to clarification. It is not, order is not passed, it is appeal pending, you are eligible to make out. Now, 22nd July appeal is pending, but it is disposed of prior to your filing of declaration. And if you have given analogy, if you have given a letter or submitted or uploaded a letter that you are intended to go for VSVS, then in such case, if the order is such passed, it will be against the right of the SSC, and SSC can knock out the door of the High Court unless and until it required clarification from the CBT issue. That takes me to another issue. If I intimated whether the appellate forum can act upon it or whether they can keep it pendence. Experience is that they will not act upon it till the time that DTS is over, time has been finished or sunset clause has been defined. That takes me to the another important issue is parallel proceedings. And I find there are parallel proceedings are been there. There is 143 assessment. There are addition which you file an appeal. There is 147 come later on the basis of certain information. So there is 143, read with 147. This is second appeal. Then third, there has been search has been done somewhere and some notings have been found. Third assessment has been found. Fourth is CIT appeal has revised your case under 263 and he has given direction. So there is again. So there are 4 different appeals for 4 different orders for the same assessment year. If it is for the same assessment year, this VSVS speaks about that you can go for a assessment year and order wise. So if you make out a VSVS only for original assessment, remaining 3 you can state contest. If you decide for the any 4 of only 1 of that and 3 earlier, you can decide the contest. There is no bar. Your immunity, your provision payment of taxes is only with respect to the order for that assessment year and not to all. So for parallel, there is no binding. There is parallel proceeding under 143.3, 143.1a also. But what makes a difference is on the penalty. We know that if there has been 143.1a, there is difference, it is underreporting. It is a return income vis-a-vis 143.3, it is misreporting. So penalty level is 50% and 200%. So you have to take a call which of the appeal you need to go and you need to file it. And again, quantum of interest that has to be taken into account. Then, if there are different assessment year, then what happens? In different assessment year, you have option whether to go for all or one. If there are different issues and you fight out that case, the issue where you are not been, you have a slightest of doubt that you will not be successful, then you should go for that year. Remaining issue you can contest. There is no bar. Similarly, if there is in 1 year, there is an addition of say 68 on 1 year in respect of the loans which are accepted in the current year. Next year, again, respect those parties only, there has been addition has been made on the amount accepted in that year. So opting for first year does not qualify you to make it a claim that in that year I opted, I have settled the issues, same should be applicable. No. There also you need to comply with all the section 68 provisions and you need to go ahead. That takes me to another important issue of prosecution. As I said, what is debar? Debar is if there is a prosecution instituted. We find there are a lot of so-called notice in TDS also, prosecution has been initiated. So unless and until it is instituted, you are not debarred. Second thing, for assessment year where issue involved which relates to prosecution. Say, for example, assessment year in which the issue has been raised on the basis of third person's statement or third person's documents found that you have advanced some loans to him. And it is found that you have advanced some loans by check also and by cash also. You denied. You have given a categorical assertion that I have not accepted a cash loan and I have no financial dealings with you. Now this statement is a contradict to you because cash loan denial is okay. But when you say I have no financial transaction with the SSC and you find out you have also given amount by check to him, so such type of statement is liable for prosecution. Now, in that assessment year where such statement is made and there is an addition on that issue. So first debar is what? Search cases. Assuming this is not search case, it is only a survey case. So you are debarred because prosecution has been not initiated but instituted against you for giving false statement. Such type of thing, I believe, this is the important thing which you need to make out. And second issue which come across mind, in TDS provisions, we find a lot of times prosecution has been initiated against the company as well as all the directors or the working directors. Now, in a case where a working director has his himself assessment which is going on and he wanted to go for a VSVS scheme. Prosecution has been instituted against that director. There are two situations. One is initiated. If it initiated, question doesn't arise. But if it is instituted, whether he's debarred, no, he's not debarred because that prosecution has been instituted against the default which company has made and not the SSC. And for his assessment year, his own individual case, there is no institutional prosecution. So he can definitely go for VSVS in this issue. However, in these cases, we require a clarification from the CBDT. Now that takes me to the issue of all happen correctly. You filed appeal, you are eligible, you filed declaration, you paid taxes, and the certificate has been issued by the designated authority. And once he issued certificate, you find out there is a mistake. They can rectify? There is no provision. But if there is a apparent mistake in the tax calculation, there is an apparent mistake in the considering the tax payment which you made out, then you can certainly write to the designated authority that there is an error, and to that extent they should correct it. So you are not correcting your declaration, you are asking them to correct only the things which is a mechanism for him to work out. You are not making that change. Such things are been possible. Then if I find a declaration, can I revise it before the cutoff date? There is no answer. But apparently there is a mistake because I wanted to file an VSVS for the assessment year, and through oversight, our junior considered the assessment year as financial year and made it for the next financial year. In that case, to my mind, we should straight away apply to the first of all make application, and if the time permits, file another declaration because that is for another year. And here, when they verify, they will come to know there is no such type of dispute addition which has been made. So therefore, that your application will be definitely considered non-ist or non-filed over. That takes me to the another issue is withdrawal. As I said, withdrawal, yes, withdrawal is possible. If I don't make the payment, I make out, but we should intimate, because if you don't make the payment, what determined by the deciding authority, you are automatically debarred. But then there has been a question, you are making a false declaration. Further prosecution may arise to you. Instead of that, you give, it was been under bona fide belief, under mistaken belief, I considered to opt it. Now I don't opt it. So there is no consequences for that making. Then that takes me to few issues which we come across. One is an interesting issue of closing stock. In case of normal trader also, in case of builder also, that issue of valuation of closing stock and issue of valuation of WIP always been a matter of debate. And if we decide to opt for the scheme and settle down the dispute, which is in respect to the valuation of closing stock. Now, what is our accounting principle, which we all born and brought up is closing stock impact has to be given in the opening stock. So if I settle the dispute in such fashion, then what will happen? Maybe in case of WIP also. So to my mind, naturally, next year, you should opt for 154 application, asking that I have paid the taxes on this enhanced value, and therefore that will be substituted for the opening stock to concern. And there is direct decision on this? I know, but I find it in case of IDS. There is section 49, subsection 5, which speaks about if you make a declaration at a value, all those issues have been considered in IDS, value which is more than your cost. So on which you paid the taxes, you are eligible to take substituted value. Same analogy can be used for this purpose also, where we can work. Similar issue is in respect of percentage completion method. Normally, in case of builder, we follow a percentage completion method, and that percentage completion method speaks about always a valuation of inventory. It goes, if you are 1% here and there, your valuation inventory will differ. If it has been enhanced, in that case, what need to do? There are similar things to work out. We will able to think, and there I find it. There has been one decision which support to us will definitely come is VKJ builders in case of 318 ITR 204, where consequential relief in subsequent year has been allowed in such type of cases to work out. That takes me to the another issue of similar addition like section 56 to 10, where we know when there is a difference between the stamp duty valuation and your actual cost. There are 2 times additions have been made. Purchaser also liable, seller also liable. So in case of purchaser, if I wanted to settle down that dispute and I pay taxes, can I take enhanced value? Yes, to my mind, yes, we can take out this enhanced value. Support is against that section 49.5. Because I am accepting that valuation, I am paying taxes on that valuation. It can be substituted, has to be considered by cost to work. That takes me to another issue of substantive addition and protective addition. Normally, when we arise when there has been a dichotomy for the AO has to consider whether it needs to be taxed in A hand or B hand. So what they do, in the interest of revenue, they tax one amount in the A person as a substantive, and in case of B person as a protective. There is no issue if I opt for VSVS on the substantive addition. Naturally, then protective addition need to be deleted, and necessary instructions were there earlier also, today also. They have to pass 154 order. Only thing, if that 4 years period has been lapsed, then whether AO can make out 154 order or not, that is the issue. But in reverse case is considered. I have, in my case, a protective addition, and I have to opt for VSVS. Whether there has been appeal is pending, yes, pending. Whether demand is there, demand is there. What is prohibited under the law is recovery of that demand is provided. Ascertainment of demand is not provided. So, to my mind, such appeals can be considered under VSVS, and he is paid taxes. Naturally, substantive addition will not be there to work. But reverse situation, not there, contemplated, not there in 2020 scheme also, 24 scheme also. So, if we take up these issues before CBDT, definitely we will be able to make out such things to work. But if things remain on different years, it's a co-assessment year, one is possible, co-person SSC is different. But if you have that, there is a addition in one case. Say for example, you have a different on money and you have invested in WIP. So addition of WIP in the 4th year and your receipt on money is the 3 years. Whether you can get up certain things to work out as such. Normally, what we plead is that I earn the money, but I invested in stock. That stocks I already offer, so you should give telescopic benefit to me. Whether such type of bills are covered or not is being protective or substantive, we have to take call on that. And as I said it, if the 4 years period has been lapsed, there is no mechanism provided in the scheme and act. In such case, what happens? So there will be a requiring clarification that in such situation, while giving appeal effect, while giving this thing, that 4 years period for the AO has to be changed for such things to work out. Forms we are knowing is registered, but I could not go in detail. But I find it, what were those forms are similar to VSVS, same as to. And when we say we copy down along with all pros and cons. Similarly, department also, when they make out, they copy down the same pros and cons of the last times. As I said it, in form number 1, there is no provision of enhancement of CIT appeals provisions to work out. It never said in the scheme. But in the forms, in the mechanism, they provided. It was there in that 2020 scheme also, and now 24 scheme also. My danger is what? They may come across later on saying that this is only error. And such error, because in the statute is not provided, it becomes binding on us. Because we make a declaration later on. And that will be a interesting situation. Then I find out in both the scheme, if I have to settle down the dispute of foreign company, which has no PAN number here, and form says without PAN it will not be uploaded. What to do? Whether they are debarred, they are not debarred. So we require a clarification in case of foreign companies, what need to do. Then MAT credit and depreciation, I said it. The mechanism speaks, the form speaks about providing a detailed working what will have an impact on the future tax liability. Therefore, I have purposefully taken the example of few hundred rupees. You consider a situation where unabsorbed depreciation loss is crores of rupees. How to compute that in this form for the next few years to work? It's been a question mark. Then so these are so far as so the issue is concerned. If I have time to, if I have further time to go ahead, so I will quickly go through some few decisions which come across, which I wanted to highlight on that. What is time available for me? 20 minutes? Okay. So I will take a few recent decisions which have been there. The decision of Pinnacle Vastu Nirman Private Limited. And these decisions which is normally been dealt from my office itself, therefore I'm taking in Bombay High Court. This was the issue of the SSC who has opted for IDS. He has defaulted in IDS. He has made 2 payments. So in IDS there was a scheme, similar provision like this VSVS, no refund of taxes will be paid. Because I have defaulted, they made an assessment. Because I made a declaration, again they issue 147, they complete my assessment. When assessment completed, VSVS came. I opted for VSVS. And I said, the taxes which I paid in IDS, you should give credit to me. They rejected my VSVS application, saying that you are not eligible to taxes which you paid under IDS because IDS doesn't contain a power to issue refund. Before the Honorable High Court, we filed a writ. We took a contention. First, I could not make the payment of 3rd installment due to my financial difficulties. So my application under IDS is not a valid application. So payment which I made under IDS, definitely department has no right to forfeit, which they appreciated. And then I said, when that amount is liable before I make a declaration under VSVS, and you tax me the same income for which I paid the taxes, how SSC can be deprived of that amount? Since it was a substantial amount, Honorable High Court has given a verdict in the favor of the SSC, saying that yes, that amount which has been paid has to be attested under VSVS, and if amount is to be extra than what is determined in previous VSVS, then even that refund has also to be given with a 6% interest. This is what a Pinnacle Vastu Nirman. That takes me, and surprisingly, there was a FAQ under VSVS that time. It speaks about no such refund can be granted to her. That takes me to another case, a situation where It is in case of Dhanraj Rathi. SSC filed 264 petition. He has also filed an appeal, but he has withdrawn the appeal and he filed a petition under section 264 with a delay condonation. That application was pending and CIT has not decided the 264 application. When VSV has come, I filed a VSV's application. Department rejected my application, saying that I am not eligible because time limit for passing order under section 264 has been lapsed and you have filed a belated 264 application. I filed before the High Court. Honorable High Court says, Income Tax Officer has no authority or power under DT-VSV Act to dispose of revision application filed by petitioner. And therefore, under DT-VSV Act, if that, as on that 264 petition was pending, they cannot brought anything which will add up to the scheme. And they have appreciated and they have given the direction to the PCIT to issue Form 5 in DT-VS case also. That takes me to another issue which I took before the High Court in case of Oregon Blazers. Here the case was, matter was before ITAT. ITAT has passed the order. I filed a MA. In MA, there are 4 grounds which I raise up. Honorable ITAT has passed MA order also, but again they are not considered my 2 grounds further. So I find second MA. Second MA I find it saying that these are, and therefore when second MA is filed, it was pending, I find VSVS application. Department rejected my VSV application, saying that your Honorable ITAT has passed the order. There is a MA first time, second MA, and they have come with a FAQ. This is a MA, in case of MA, if the order has been passed in limine, whether, and they said your order has been passed in limine means not ex parte, you are not eligible. We went before High Court. Honorable High Court says that when the MA was pending, it doesn't mean that ITAT has decided the order. And they come with saying this CBDT cannot issue a circular adverse to the SSC. And it says that FAQ 61 issued by CBDT, to the extent it restricts VSV's benefit on appeals dismissed in limine, deserves to be struck down. And accordingly, they have struck down that circular and they allowed VSVS. So therefore, I said, a number of times we need to ask for the FAQs. You will be able to take out all those cases benefit, which will be there on VSVS 20 directly. Then that Yuvraj Pawar, I have 271 ITR, I discuss with you. Then I will take up the case where again in 264, it is a case of 367 ITR 293. In this case, revision application of 264 of the Act was pending as on the cutoff date, and the SSC filed a declaration. CIT before whom revision application was filed was also designated authority. So both the people were same. So what CIT did, they dismissed my 264 first. And then they said you are not eligible because 264 is dismissed, not pending. There High Court says, when you are being the person, same person, you are knowing when he make a declaration, you are not passed the order. So you cannot supersede the beneficial provision which has been given. And they categorically make out, saying that it is opposed the spirit of the scheme. And therefore, as is eligible for VSVS. And same view also been taken by Kerala High Court in case of E.N. Murli, 295 ITR 57. On that initiation of penalty proceedings also. There is a case of Tingrania Steel Corporation, 291 CTR, where under the KVSS, Honorable High Court held that mere initiation of criminal proceedings would by itself not debar the SSC to go ahead. Then CIT versus Reliance Limited. Here, the Supreme Court refused the condonation of delay in filing review petition against the ITO. In this case, ITO has issued communication dated 20 October 20 informing that petitioner is eligible for resolution of direct tax dispute under provision of direct tax Vivad se Vishwas scheme. So this such type of correspondence also been considered. That takes me to the issue on the refund, which I considered, is UPS Freight Services India Private Limited versus it is 156 Taxman Com 489, where the SSC was entitled to refund of as per Form 5 issued by the Legislative Authority, and which should have been paid by 31st July. That 90 days coverage been there. Same was paid on 26 May 2023. So 21 to 23, they have given an interest at the rate of 6%, even though there is a provision that no refund or no interest under Section 244 will be given in case of refund cases where SSC has paid tax before the duty waste weight work out. Friend, these are some of the issues, some of the cases which I wanted to take up before you, and has been given time up to 5:30. I should also give some time for audience workers gathering here to have any questions, to take out those as the issues for as a value addition to me also. But as has been rightly said, that Vivad se Vishwas scheme is aptly said that it signifies from the shifting of conflict to trust, and we know is the foundation of healthy and effective tax system. In a lighter vein, when we were discussing before the issue to be discussed, we were speaking about the health. And health and prosperity goes hand in hand. That was the issues to work. I said it, your health, if it has been giving you an indication till your prosperity is okay. But wealth, if you see that, and if your wealth, it carries with you so many issues, then like department has stopped wealth tax, keeping in mind that wealth should not be considered as a prosperity for it. So here also we can think in that fashion. We have to be a bridge gatherer between the SSC and the department, because normally what happens when bridge has been built, when there has been the issue of water flow of the two neighboring villages and bridge has built up, then two people can reside very happily. And we are the people, we all tax practitioners are the people who have been instrumental making that bridge smoothly and advancing the make out to thing, saying that this is a scheme where if there have been not a big issues have been involved, it is better to settle and have a peace of mind, concentrate on the business, earn the money. Because when there is, because normally what happens, we are being very disturbed so far as penalty issues are concerned. Tax issues, penalty and interest, both. Those are heavy. But if the department is coming with a hand that you pay only taxes and they are ready to give up the penalty and interest, there has been one of the biggest avena or bonanza which we have got again. Probably it may not be later on there to work out. So we need to make out. And very lighter way, I come across one Hindi song which I remember. I have no good voice to as a singing, but if I narrate one line out of it, you will be able to relate it to the our system in the tax litigation. मुश्किल जीना यहाँ जरा हट के बहु बम्बे मेरी जान. Now consider these lines with a litigation. Line speaks about navigating challenges. In Mumbai, if you wanted to go and travel, you find out the things to navigate something. Because once you lap one turn, you will fall 10 kilometers away to one. Similarly, if this tax litigation challenges we navigate correctly, it's a uphill journey of the taxpayer can be reduced. To that mind, DT Waste 2024, I think it's been one of the welcome provision which came across, and we should all take a benefit out of it. Of course, with a rider, which I request our president also, and our direct tax representation committee also, to take up these issues at an appropriate level, so that we will have FAQs and we can make the life of the people a very perfect, peaceful. At the end, I also give my heartfelt gratitude to all office bearers, study circle committee, and my friends and my colleagues have been given me an opportunity to speak on this subject. I have been told by someone that this is the first talk on this DTVS across the country. I don't know, it is not, but I hope I try to clarify the things to the best of my abilities. Thank you very much for giving me this excellent opportunity to speak with you, share with you my thoughts on this important topic, where we are going to shape the articularies on the litigation provisions of the SSC. Thank you very much.
Thank you so much, sir, for that valuable and detailed session. I am sure that everyone here has gained immense knowledge on the topic. Now, you can ask any questions on that topic. Sir, one question is there. There is a separate penalty order passed. Can it be waived under the scheme?
If there is no quantum appeal pending, and if you are not eligible quantum appeal, then definitely you can work out, even though the provision speaks about in case of penalties related to quantum assessment, then you are required only for penalty. But when you are accepting quantum assessment and it is not pending, certainly you can go. And as I said in my lecture, there are many penalties which are not related to assessment. Those you certainly cannot.
If while filing a penalty appeal, assessee has paid part amount, can it be appropriated against the component, tax component?
There is no question because see, you have to make the payment. I just what the queries wanted to ask is that if you have paid earlier some amount, whether it can be adjusted again, then yes, it can be adjusted.
Okay, thank you, sir. I would like now to call upon our Secretary Advocate Dhaneshwar Narwade, sir, for some important secretary announcement. Thank you, Narwade, sir.
I really wanted to ask the question whether without applying can we go for case test? No, there has to be applying protection. Therefore, we must make a reputation for deemed. There are so many cases where time limit is not expired. Such appeals has to be taken into account, and probably last time they have given appeal, they have to the provision there, DTVS. So this time they will also consider it.
Vivad में विश्वास नहीं
विवाद में विश्वास नहीं और
Can it be assumed that the delay condonation application will be made for the
for that you need to file up before March 22nd.
Yeah.
That I said now all the delay related everything you need to provided it is filed before.
Thank you, sir. Good evening, friends. I am Secretary Dhaneshwar Narwade. First announcement. the 18th certificate course in taxation law. This is very much important course of our association. It is starting on 4th of January. In this course, we cover income tax, GST, accounting, company law, profession tax, RERA, and other allied laws. The registration has already been started. The scheme was announced by our president. The MTPA Adhyaksha Ladli Bahin and MTPA Adhyaksha Ladla Bhau. That scheme was extended from 30th September to 31st of October. I request all the members to give this information to your staff and professional colleagues to enroll this for this certificate course. Then the second announcement, one-day National Tax Conference, Gyanavardhanam at Diamond City, Surat, held on 14th October 2024. Organized by All India Federation of Tax Practitioners Association, jointly with Maharashtra Tax Practitioner Associations and other association of Gujarat State. I request all the members to join this event to enrich your knowledge. The second National Tax Conference Panchaganga Jnana Sangam at Kolhapur will be held on 26th and 27th October 2024, organized by Goods and Service Tax Practitioner Association of Maharashtra, jointly with Maharashtra Tax Practitioner Association, All India Federation of Tax Practitioner, North Maharashtra Tax Practitioner Association, and Tax Consultant Association, Sangli. I request all the participants to enroll yourself to join this event and grab the opportunity to update your knowledge. And last, very important announcement, that is the foundation course in GST and taxation, which is conducted and organized by our association, Maharashtra Tax Practitioner Association, jointly with Savitribai Phule Pune University. The flyer is already there on the website of Savitribai Phule University, Pune University. I request all the members to enroll for this course also. It's very important course. Here we can get the knowledge of GST and taxation. The first course is going to be conducted by our association with the University of Pune. Thank you. Thank you very much.
Thank you, sir. As we approach the end of today's program, it is time to acknowledge the thanks to those who have made this event possible. I now request Aniruddha Chavan sir to deliver the vote of thanks.
Good evening, all of you. Dignitaries on the dais, all participants and my senior members. On behalf of the Maharashtra Tax Practitioner Association, I would like to express our sincere thanks to our esteemed faculty, CA Vishwas for this comprehensive and enlightening presentations. Sir, your expertise and clear explanation have greatly enhanced our understanding of this important scheme, and we are truly grateful for your time and efforts. I also would like to extend my heartfelt gratitude to all of you for joining us today, both physically and online via the Zoom platform, for this insightful session on the Vivad Vishwas scheme 2024. I would also like to thank our organizing team for their hard work in making this hybrid meeting possible. Your dedication and seamless coordination ensure that both your in-person and online participants could engage effectively. To our participants, thank you for your active involvement and thoughtful questions. Your enthusiasm and curiosity are what you make this session so valuable and enriching. Lastly, we appreciate the support of your technical team and ensuring a smooth and uninterrupted online experience. Thank you once again, CA Vishwas sir, and to everyone who contributed to the success to this meeting. We look forward to more such informative sessions in this too. Have a great evening. Over to Narod.
Thank you, sir. There is some announcement. If anyone has a query or any suggestion, you can email us on the wmtpa@gmail.com. Then we have arranged for small breakfast. Thank you, sir. That brings us to conclusion of today's study circle. Thank you all for attending, and we look forward to seeing you at our future events. Have a wonderful evening. Thank you.